Hi, this is Todd Ballinger, and I've got a case study for you this week. And on the phone, I have Trevor Hammond. Welcome, Trevor.
Hey, Todd.
Hey, thanks for spending some time with me today. You shared with me a story that I thought was just so interesting that I wanted to share it with some of our other users. And it's a story that started back in 2006. But what was fascinating is, as a liability advisor, you were already starting to look at your role a little bit differently. And if you wouldn't mind, just tell people the story. It's a sad story, but at the same time, it speaks a lot to the value that you're adding out there to your clients. So we're going to talk about the case study as it's resolving today, and we have it up on the screen. But first, tell everybody a little bit about the story, what happened in 2006, and sort of what's transpired since then.
Yeah, it's a pretty powerful, moving story. Puts a lot of things in perspective, but at the end of the day, it makes you feel really good about what we do as a mortgage advisor or a mortgage planner, where we truly do plan things out for the customer. Back in 2006, I had some great clients come my way, referred by a real estate agent I work with. They were selling a house, 2 young kids, buying a little bit bigger house, and they had lots of money to put down. And we really went through the process of what do you feel like the highest and best use of your money is. Let's look at the whole financial picture. Everything that we do on a daily basis for our clients. And at the end of the day, we decided to put 20% down, even though they could have put a lot more down. They did an interest-only loan, and I got them connected with a preferred financial planner to really sock more money away, get a lot of their other financial needs in place, such as college savings. And so really an equity management type of a meeting, when they had this big lump sum of money from a previous sale. And so that was the '06 story. Everybody's happy. They've been great clients ever since. We've talked a lot. They call me with financial questions. Great relationship with all of us working together, the financial planner, the real estate professional, myself, helping this family. Well, one of the key things that we had obviously looking back had no idea what might happen. Well, I had suggested when they meet with a financial planner to get some life insurance in place with some of this money. And some of the savings from their interest-only mortgages they had taken out at that point helped fund this. Well, they bought a life insurance policy for both of them. 1 year later, in late '07 or maybe it was early 2008, the wife was diagnosed with breast cancer. And it was just devastating news. She was 36 at the time, and we were all there to support. And everything was fine at that point, but she fought it. She beat it. And to fast forward to really just about a month ago, the breast cancer won, and she passed away. And at this point, personally, I completely forgot about a lot of our conversation back in '06, to be honest. It was so far behind us, and we've had a few other things to think about over the last couple of years in this industry, as everybody knows. The financial planner calls me, says, hey, you remember back in the day when you referred them over to me and we got them all set up? Well, we had a $500,000 life insurance policy on her, thankfully. And now we need to all get together and figure out how best to use some of these funds to take care of Michael, the husband. So that brought us to about a month and a half ago when we had our first meeting, about a month ago. And he was so thankful to actually thinking back to when I first met with him and made him get introduced to a financial planner who really had their best interests in mind and could think ahead to protecting them, not even knowing that this breast cancer would pop up, and ended up with, now a $500,000 life insurance policy at least coming to him to help take care of the kids who are 6 years old and 3 years old at this point. He's on his own, down to a single income. So it's just a very powerful, moving story that is kind of so close to my heart at this point. There's the background.
So that's amazing. So, again, taking that time, a lot of times we don't see the impact of our taking the time to spend with somebody and go beyond just helping them get a new mortgage or whatever. And in your case, you became a catalyst for them to go out and get some financial advice, and that led to, I'm sure, a number of different financial impacts for the client. But in this case, they've come back into your office now, and it's the husband and the financial advisor, and they've got $500,000 cash that's come in from this policy. And I can see on the screen here, they have the 351 mortgage and a second mortgage from, I assume, the prior transaction. So really the challenge was, how much of that does he pay off the mortgage in full, or does he, because he's got enough to do that, or does he pay off part of it and refinance to a lower interest rate? So how did you guys take them through that scenario?
Well, when we all got together and the financial planner came to my office along with Michael, the client, we really, the number one thing we had to do was figure out cash flow. The household income had just drastically been reduced. He knew his income might go down a little bit trying to care for, 2 kids. He was going to have a little bit more daycare expenses. So the mortgage was the first thing that we all wanted to look at. So what you can see on the screen was we've got this big bucket of life insurance money coming out of $500,000. What they wanted to see was how much money it would take to pay down the mortgage. At the same time, we were going to convert it over to a principal and interest loan. How much money out of that $500,000 will we need to get that mortgage to an affordable level for a single dad with 2 young kids? The other things they were going to do is whatever was left after that, we're going to fully fund the college fund for the kids.
Uh-huh.
All kinds of other great things were coming out of this money to really take care of the family. So
and I would assume some child care, right?
Yeah. Oh, yeah. I mean, that's out of his cash flow. He makes good income. I believe, off the top of my head, about $100,000 a year. But that doesn't go a long ways with 2 young kids and daycare and all these other expenses, obviously that life costs us.
So it looks like you got a target.
You'll see on our screen. It was what's that?
So it looks like you had, in this situation, if he paid it off, he'd have a lot of cash flow, but he'd lose that use and control of that cash today. So the goal was, can you get it down to a certain cash flow that he's comfortable with?
Mm-hmm.
Great.
And that was a key question the financial planner wanted me to analyze for them from a mortgage standpoint. Because obviously he could pay the house off completely. But, from all of our educating, he knew there was, especially at his income level, there's great tax considerations. And more than anything, other things that have been happening along the way from a mortgage planning standpoint is in middle of '07, his own business was really suffering from, the economy. Mm-hmm. And he actually had to go out and leave his company, leave it to his partner, and get a, what we like to call a JOB.
Yeah.
And he, over the last few years, has thanked me profusely for that interest-only feature, just simply because he had more flexibility with the cash flow. So we've groomed him to understand the power of a mortgage and how to really manage this money for long-term, benefits to him. So he didn't really want to pay it off, but he wanted to see if that made any sense.
Gotcha.
And at the end of the day, sitting down in my office, he said, no, I do make a good income. I feel secure in my job. Let's just use as little as we can to get a good mortgage payment, but then let's use the rest to fill up the college education funds for the kids and keep that liquidity in our life, because that liquidity was really important to him.
And it looks like
the last few years.
It looks like the property values clearly dropped as well, because I see a 370. Is that?
Oh, yes.
So the other thing you had to do.
We tried refinancing for them a couple times over the last couple of years, and couldn't do it.
Yeah.
They were just too upside down, and it just wouldn't work. So now that we had this chunk of money, we could make it work.
Gotcha.
So really the bottom line.
So you could take that cash and buy it down to $296 as a loan amount, and with current interest rates, drop that payment down to around $1,478 a month.
Yep.
And so the closing cost, the way you set that up, is you show the $500,000 that he has available at closing, and then you're showing that after the 30-year fixed is done, with the cash he would need to come closing to, he'd have the 373,933 left over.
Yep.
So that gives the advisor what the
and that's what the planner wanted to know. Yep. That was what he was really looking for. Number one, cash flow, but then two, how much money will I have left over to take care of all the other financial things that they need? You know, paying for the funeral services and the college funding, as I keep saying. And those are some huge goals of the client. So really, the financial planner was waiting for this number from us.
So you've actually helped. So you've answered the question for the planner, which is what have I got to work with, which is 373,933, and you've answered the question for the client, which is what do I have to work with, which is an extra $872 a month in cash flow.
Yeah.
Yep.
And it's really that simple. That's all they needed to move forward, right?
Yeah, I mean, you'll notice I've minimized a lot of the sections of the software. You know, this was just one of those situations where I could overwhelm the financial planner and the client with all kinds of just great financial data and analysis. But at the end of the day, I just wanted to simplify this. The client was all about cash flow. The financial planner was all about how much money might be left over for me to take care of everything else for the family financially. So, you know, we didn't look at the tax implications like I normally do, the prepayment comparisons, the savings comparisons, because that just wasn't really a top priority for him at this state of mind. He wanted to see that he's going to save about $872 a month on his new payment and know that, yeah, that's affordable for me now.
That's fantastic. Well, you know, I mean, it's a great story. Again, you don't always get to see the impact of your advice in real terms, but this is one of those things where you got to see over a 4 or 5 year cycle the value of your advice play out, and you can see that the financial advisor clearly is still engaged, and the consumer is probably very thankful. And it's great that you were able to use the tool to facilitate the advice, but I think it's even greater that you took the time and that you take the time to do this with your clients today, to not only provide the loan, but to get them in contact with other professionals that they can utilize to get their financial fitness in shape.
Yeah.
Awesome, man. Well, thanks so much for your time.
One other point I made on this, please. I guess I should bring up, I did show more of the software or the analysis to the financial planner than I did with the client.
Oh, great.
And so it was one thing I wanted to add value to the financial planner is I shared with him a lot of the other analysis to make sure that he knew that this did make sense to pay down the loan and get it to this 80% level of what his house was worth. But when the client came in, again, as I said, just focus on what was important to him at this time, and that was the beauty of it. The planner was really excited to see the software, actually, which was cool.
That's great. So you were able to jump into the total analysis and show him the returns and the financial impact over time and the break even and stuff like that.
Yep.
So he knew what he needed to give him the comfort that this really was a better option for the client than paying the mortgage off in full. Mm-hmm. And the client is blissfully happy and unaware that happened, but yet he's got what he needs.
Yeah, that's the beauty of it, trying to simplify things at the point of consultation, but letting that client know that before you even got here, your financial planner, me as your mortgage professional, we have already gone through all of the nuts and bolts and details for you on your behalf to really make sure we're doing the right thing. Mm-hmm. Here's what you would like to know about.
That's great.
And he was extremely appreciative, and appraisal's in. We're closing next week, actually. Everything's going. He's as happy as can be at this point in his life. From the financial side of things.
Yeah. It's bad. I mean, again, it's a bad situation, but it's made worse when you're financially losing an income and you don't have anything that you can do. In this market, going and selling that house would not be necessarily the best thing for the kids or for the family.
No.
And being able to provide that cash flow for childcare and know that these other things are taken care of. I mean, again, that's life changing in many ways.
He's all about the kids at this point.
Yep.
So, they've had quite the disruption in their life, and who knows how it'll impact them over the rest of their years. So, having to move houses, go rent a place. I mean, he doesn't have to do any of that because of all the planning we put in place a long time ago, which is he's just extremely grateful for.
Yeah. Well, Thanks again, man. I appreciate all that you do, and thanks for taking the time to share this with our group.
Absolutely. I appreciate it, and I'm sure we'll talk a lot more, but it's great to help these guys out.
Great. Thanks, Trevor.
All right. Thanks, Todd.